trade that saw markets close at a month low, courtesy weak global cues. Nifty and Sensex fell over 1%, with the market breadth firmly in favor of declines. The broader markets underperformed the benchmarks, with Nifty Bank and Midcap Index falling over 1.5%, while pharma and diagnostic stocks surged. Reopening stocks slipped on COVID concerns. Manglam Malu is here with details. Manglam, sum up all the market action for us.
Well, it was a weak day of trade, but importantly, it was a weak, volatile day of trade. There was rise of fear, and there was rise of COVID fear as well. India VIX was the standout index that told you the story of the day. The Nifty meandered in a 300-point range, with the highs being just below that 18,500 mark and the lows being just above that 18,150 mark as well, which again is in the broad range of both the 50 and the 20-day moving averages of the Nifty. Talking about moving averages, the Nifty Bank, which had held on to the 20-day moving average, had now broken it in today's trading session and closed below that as well. The broader markets were telling you that there was weakness, weak internals. 5 stocks declined for each stock that advanced, and the mid-cap index underperformed both the Nifty as well as the Nifty Bank. The only index that stood its ground today was the Nifty Pharmaceutical Index, and a bunch of these diagnostic stocks that gained on fears of rising COVID cases in China. So just to name a few, we had Glenmark Pharma, Granules, Divi's and Cipla from the Pharma pack do extremely well. Diagnostic gainers for Metropolis, Dr. Lal and Thyrocare. But on the weaker side, we had all those unlocked stocks go back into, losing terrain. But these again are just fears. And as a result of which, we saw a bit of decline in Indian Hotels, Delta Corp, PVR, as well as Trent. It was a weak day. It was a weak, volatile day.
And the minutes of the last monetary policy meeting show deep divisions within the 6-member panel. The RBI governor and deputy governor sound very worried about inflation. And Governor Das has warned that a premature pause in monetary policy action would be a costly policy error at this juncture. But Jayant Verma, an external member of the MPC, believes repo rate at 6.25% overshoots what's needed to achieve price stability, and the committee's stance could be more damaging to fragile growth outlook. Ashima Goyal, another external member, believes it is time to move to a neutral stance where movement can be data-based in any required direction. And Lata Venkatesh spoke to 3 external members of the MPC. Here's her report on the minutes and the divide within the committee.
It was a divided vote on both the rate action as well as the stance, and that division comes out in the minutes of the Monetary Policy Committee meeting as well. The governor and Dr. Patra, and to some extent even Dr. Ranjan, are clearly more worried about inflation. They believe that it's, even Dr. Patra very clearly says that even in the next 1 year, inflation will at best be between 5 and 6%. It's not coming below 5%, and therefore there's work to do. As the governor points out, sustainable growth is possible only if inflation comes closer to target. On the other hand, Dr. Verma believes that RBI started tightening later, but you can't compensate for that by over-tightening now, because growth is already fragile, and tightening now is going to have an impact a few quarters down the line, and hence growth could really take a beating, which is why he voted against the rate hike in the first place. He also says that inflation forecast of 5.4 1 year down the line is suspect, because the Reserve Bank's assumption is $100 per barrel crude, whereas actually both spot and futures are showing $80. So he believes inflation could be lower than what is being forecast. Dr. Ashima Goyal also sounded pretty dovish. She believes that growth, there has been a credit drought, and therefore growth needs to breathe, needs to be given a better chance. She believes that the high core inflation that Dr. Patra and the governor speak about is more because of supply side shocks, which are easing. Dr. Bide seems to be like a position in between the hawks and the doves. He says that yes, growth is also under threat, but inflation, we have not really achieved the target. So a poor outcome on both is not a good option. He therefore believes that more work needs to be done to bring inflation to target. Net, it looks like 4 out of 6 are in favor of more action to bring down inflation. At least that's how it looks as of now.
My own view of core inflation is that this persistence is because of multiple supply shocks that we've seen through this period of pluri-shocks. First, the global supply chains, the pandemic, the Ukraine war. So it may look persistent, but it is still supply shock driven largely, not so much demand driven. And that is why, but I believe that is why I am not so worried about core inflation. I think there are signs that it is softening.
The growth is extremely fragile. First of all, there are headwinds from the global economy. Our exports growth has crawled to a standstill. On the other hand, the inflationary pressures have significantly come down. Commodity prices are well off their highs, and we see the picture on inflation as becoming much more manageable than before.
It is important that the inflation is brought within the target band, and I think so. I think that certainly is a key objective of the policy for now, because the uncertainty on growth is equally significant, and I think, and it's important, I think, that we bring down the inflation rate even when there is some concern that the growth is sort of subsiding.
And RBI Governor Shaktikanta Das made yet another pitch for banning private cryptocurrencies, saying they originated to bypass and break the system and have no underlying value. Speaking at an event organized by the Business Standard, Governor Das warned that private cryptocurrencies are allowed to thrive. It may cause the next financial crisis.
They have absolutely no underlying. And not only that, I am yet to hear any credible argument about what public good or what public purpose it serves. If it is allowed to grow, that if you try to regulate it and allow it to grow, please mark my words, the next financial crisis will come from private cryptocurrencies.
All right, that was RBI Governor Shaktikanta Das clearly expressing concerns about cryptocurrencies, saying they were made to bypass the system. And speaking at the same event, Reserve Bank Deputy Governor Ravi Shankar defended the central bank's regulations for digital lending apps. He said that non-banks offering banking functions should be regulated like a bank. Shankar also said that compliance aversion has been a key regulatory challenge in the digital lending space.
If we want to avoid the inefficiencies caused by differential regulations for similar activities across different entities, a non-bank undertaking banking functions needs to be licensed and regulated like a bank. Without the license, it should not be allowed to undertake banking activities. This, for example, is what RBI in essence did recently when it clarified that prepaid instruments cannot be funded out of credit lines.
And the government has been considering making changes to the insolvency and bankruptcy law, and sources have told CNBC-TV18 the aim is to reduce delays and expedite resolution process. Sapna Das joins us with more. Sapna, take us through the amendments that are being discussed and when could they be brought to Parliament?
Well, certainly there are certain significant amendments the government is mulling on as far as the IBC is concerned. These amendments are at the moment under discussion. We are given to understand the aim here is very clear: to maximize value, to cut back delays, and to expedite the resolution process under IBC. That's the overall aim for bringing about these proposed amendments. For instance, a lot of it is already covered under rules and regulations of IBC, but many a time they go unimplemented. Industry at some point in time says that it's not part of the act and hence it cannot be done. So to plug those kind of loopholes as well, the government is proposing to take on a lot of the stuff into the act itself. We are given to understand the nature of these amendments is going to be wide-ranging. For example, things like tighter timelines for admission of applications, litigation, liquidation, nature of the bids, value of the bids. All of that is under review at the moment. The government has already informed Parliament that around 47% of the IBC cases, they could be closed only beyond the 270-day mandated timeline. It's 180 days plus 90 days for resolution, and many of them have gone beyond that timeline. So to take care of all of this, amendments are being proposed, and if all goes well, maybe the government will be in the position to bring them into the Parliament sometime in the second half of the budget session.
All right, second half of the budget session is when we may see those amendments being brought to Parliament. Onto a CNBC-TV18 exclusive. The race for debt-ridden Reliance Capital has reached the climax. Torrent Investments has emerged as the highest bidder, with Hinduja being the second. Ritu Singh is here with the details.
That's right. The e-auction for the sale of Reliance Capital under the IBC has concluded, with only 2 players coming forward to participate in this auction round. We've been given to understand that Torrent Investments and Hinduja Global were the only 2 players to participate in the bidding, and the other 2 suitors that were in the fray, which is the Piramal Cosmea Consortium as well as Oak Tree Capital, did not participate in this e-auction round. That said, we've been given to understand that the highest offer has come in from Torrent, which has offered 8,640 crore rupees compared to the base bid amount of 6,500 crores which the lenders had set. The second highest offer has come in from Hinduja Global, which we understand has offered 8,110 crore rupees. Of course, these are only the headline numbers. We'll have to see the fine print to understand exactly how much lenders are able to recover. But even with the headline numbers, the write-off will be upwards of 70% for the financial creditors of Reliance Capital. Now, we've been given to understand that these 2 bids will be evaluated, and when the final voting takes place on the bids, all of the bids, including those from the Piramal Consortium and Oak Tree, will be considered for the lenders to finally decide on who the winning bidder is going to be. Of course, the larger the recovery prospects, the more favorably the bids are going to be viewed. The next meeting of the Committee of Creditors is slated to take place later this week to review these bids and assess their legal eligibility.
All right, thank you very much, Ritu Singh, for joining us. Moving on, Finance Minister Nirmala Sitharaman said she is looking forward to engaging with the Indian industry on stepping up private sector investments. Speaking today in Parliament, the Finance Minister said she has been urging private companies to up their investments on various occasions and will continue to nudge them to expand their capex.
I have gone to the various fora in which I met with private investors, industry leaders, business leaders, saying they should really rev up on investments. Yes, as Finance Minister, when I have an opportunity to interact with them, it will certainly be something which I look forward to engaging with them and also nudging them to see if they can be even more coming forward towards investing more.
Pharma, drones, food processing, electronics will see 4,000 crore of incentives by March next year. That's the word coming in from DPIIT Secretary Anurag Jain. Speaking to CNBC-TV18, Jain said this would apply to sectors that have short investment cycles.
Our expectation is that about 4,000 crore of incentives would be disbursed before March, which will be these sectors where either the incentive cycle, investment cycle is short, or the schemes which started a little early. Once the application is approved, the company has to do the investment. They have to meet the minimum threshold target of the investment. Then they have to meet the minimum threshold target of the production sales. It is just not that after investment you get the money. It is after the sales you get the incentive. So therefore, it takes 2 to 3 years before the first incentive is drawn out.
All right, so that was the DPIIT Secretary telling CNBC-TV18 that yes, they have been reviewing the PLI schemes, and the focus is not just on giving financial incentives but also ensuring high-quality products. Moving on, after 2 months, the Union Health Minister has chaired a meeting of the COVID task force as infections rise in China. The government has advised citizens to wear a mask in crowded places, even as it insisted that there is no reason to panic. The central government has already urged all states to conduct genome sequencing of positive samples to keep track of emerging variants. Health Minister Mansukh Mandavia has urged officials to strengthen surveillance.
18 के ऊपर प्रिकॉशन डोज सबको लगनी चाहिए, लेकिन लगी है सिर्फ 27-28%। तो हम अपील करेंगे कि प्रिकॉशन डोज जिसको नहीं लगी है वो ले लीजिए। ये भारत की पेंडेमिक रिस्पांस का एक पिलर है, पॉलिसी है, वैक्सीन अवेलेबल हैं, तो उसको तरफ जाइए। और पर्टिकुलरली जो हमारे सिटीजन्स, सीनियर सिटीजन्स हैं, वो कोई छूट गए हैं प्रिकॉशन डोज से, तो हमेशा की तरह जैसे हम पहले भी अपील करते थे कि उनका हमें ज़्यादा ख्याल करना है।
All right, on that note, we take a short break, but coming up, beaches in Goa bustling again, hotels, restaurants, tourism hotspots hope for revival as passenger arrivals and hotel occupancy rates surpass pre-COVID levels. Details when we are back. Hello, welcome to India Business Hour. The Commerce Ministry is trying to introduce the proposed Desh Bill in the budget session of Parliament. Now, this bill will replace the existing laws governing special economic zones. Now, this bill talks about easing measures, ease of doing business for companies in SEZ zones. We believe talks are on between the Commerce Ministry and the Finance Ministry's Revenue Department to iron out differences. Abhimanyu Sharma gets us more.
Government sources have indicated that the Commerce Ministry may introduce the Desh Bill in the budget session of Parliament. Currently, discussions are underway over the taxation aspect in the Desh Bill between the Commerce and the Revenue Department. Discussions are also on to drop corporate tax concession proposed in the Desh Bill. Finance Ministry had raised objections to the extension of 15% corporate tax rate till 2032. The Commerce and Revenue Departments are considering changes to the bill to give a greater push to exports from India. Commerce Ministry is also keen on exempting SEZs from the net foreign exchange evaluation criteria despite objections which have been raised in the recent past. It remains to be seen what decision will eventually be taken in this regard and how early the bill will be prepared for tabling before the Parliament.
All right, thank you very much, Abhimanyu, for joining us. Moving on to some international news now. Afghanistan's Taliban rulers have banned university education for women, say restrictions are in